This is the European edition of Breaking Banks, the world's #1 fintech podcast and radio show. We bring you the European unicorns, startups, founders, regulators, and leaders innovating the rapidly evolving fintech scene today. A truly localized podcast with both English and local language content, with some of the world's most well-known hosts and influencers in the fintech sector globally. Join us every week as we explore what makes the European Union a phenomenal proving ground for many of the fastest growing fintech plays in the world today. Okay, let's roll.
Hello and good afternoon here in London. My name is Ajit Tripathi. I'm your host for Breaking Banks Europe, episode number 108. And today we have two very, very special guests with us. We have Kirill Kutakov, who is the CEO of StakeWise, a liquid staking venture, one of the most innovative ones in that space for that I know, and I've studied that space. And Marcus Maute, who is a co-founder of Bridgetower Capital in Switzerland, a very active, venture investor, himself an angel, very active in the Web3 space, and then also very active in the staking area. So thank you to our producer, Renata, for setting this up. Today, for our fintech audience, we're going to talk about something that is actually slightly involved from a technical perspective. We'll try and really simplify it. Now, one of the things we have seen is that, the whole crypto space, there was a time when fintech was fintech. Fintech used to do mobile apps. And then there were all these shadowy people in the garages who did funky things like, Bitcoin and Ethereum and God knows what else, right? And when I was at PwC, one of the senior partners had told me, what is this Bitcoin thing? Isn't this just for drug dealers? And I said, do I look like one? And he wasn't very happy with that. But now we have come so far. Now the biggest names in institutional finance and fintech and banking, we're all talking about crypto, and we're talking about crypto in a lot of detail. So words like staking, proof of stake, staking rewards, slashing, all of these terminologies have become kind of firsthand, and you can hear about them in the boardroom. You can hear about them on your from Revolut and the likes. So there is clearly something going on, and that's what we're going to talk about, how this relates to fintech, what is it, what's the big opportunity, and what do we need to know about it? And then last but not the least, in the context of Europe in particular, where both of our guests sail from, what exactly is going on? And so Kirill, what is staking?
Right. Thank you very much, Ajit, for having me here on your podcast, and also for the introduction. To put it short, into plain words, staking is a process of participating in the network for achieving consensus. So it's locking up a portion of your crypto that is specifically the crypto of the network in order to secure it. It's essentially a bond. So once you submit it, you lock up some of your native crypto, you start participating in the validating process. And if that goes smoothly, then your bond, it actually grows in value. So you get the network inflation rewards. And then if your node is down and it's not securing the network properly, it's offline for some reason, then you actually get some money subtracted from your bond as a penalty for downtime. You basically did not uphold the promise to the network. So in short, it's a way to earn money quite passively, but also a way to secure the network.
Amazing. So you're you're doing something useful, and you're hopefully getting paid for it, right? Which is not such a bad thing. I thought that's not something we did in crypto for a few years. People just bought and held and did nothing with Bitcoin. So Marcus, if you were telling a banker, right, or someone who doesn't come from crypto about staking, what would you add to what Kirill described, or how would you sort of talk about staking to a 5-year-old? And as somebody who used to work for a bank, that's kind of how we think.
It's an interesting question, right? Bringing a banker and a 5-year-old in the same sentence.
Not that different, right?
Yeah. First of all, just a short add-on. All these blockchains. A blockchain needs software and hardware, right? So the people who are running the staking infrastructure, they are running actually the hardware for the blockchains. So I think this synergy between hardware operators and the blockchains from the foundations themselves, this is super important to understand. So there's always software and hardware, and staking at the end, the main idea behind this inflation, which was also mentioned, is to incentivize the hardware operators to constantly produce new blocks. I think this is super important to understand. Then going to the bankers, these validator node operators, or miner, however you want to call them, they are also securing the network. So you're securing the network, and on the same hand, you're also participating in the governance process. So if you as a banker or as a large organization, if you want to have a seat at the table at the governance process of these blockchains, then staking is for the best way to participate and
right.
being part of it.
So Bitcoin doesn't have staking, right? So not all. So let me just try and simplify what you guys both said, right? Which is, let's say a blockchain is a shared database. So now you have 5 guys, 5 computers that want to agree on what gets written to this database. Each one of them has a copy of the database, and the way they agree on what gets written is, because people might be, sending bad data, right? So people might be essentially trying to rewrite this shared ledger in a way that sort of gives them more money, or they might try to steal money or do funny things, which kind of don't help the trust in this shared database. Now, so what you do is you get everyone to, let's say stake something, post a bond. And now that bond could be, jokingly, it could be my firstborn, right? So I send my firstborn to work in the field. So I'm staking, probably not the best example, so I give you $10,000. And then those $10,000 are the bond I'm posting. And if I do something bad, like the wrong data or do not comply with the rules of the protocol of this blockchain protocol algorithm, then I can get slashed. So I get a reward for behaving well, for staying connected, for all of the money if I do bad things, right? So that's kind of the idea of proof of stake. So this is really cool because, and why is it so important? Bitcoin, works fine. It's been around 12 years, doesn't have proof of stake. Dogecoin, Elon Musk loves Dogecoin, doesn't have proof of stake. So why is proof of stake such a big deal? I mean, why is it so important? Marcus?
Yeah, I think one of the main arguments that has been used in favor of proof of stake networks is that they are not as computationally demanding, which is to say they don't require much computing power to be run. And instead, they rely on capital commitments rather than computing power commitments. It has a plethora of environmental effects, positive, I should add, to the extent where people can avoid concerns for just massive energy usage like Bitcoin does. So I think the most known proof of stake network these days is, or rather, the to become proof of stake network is Ethereum. We're in this transition process from traditional mining into staking, and quite a few people have grievances about NFTs and their environmental footprint. Yeah. Well, once we do transition to proof of stake, this concern can be mitigated entirely.
Yeah, I was talking to one of founders of the podcast, Brett King, about his book. He just released a new book called The Rise of Techno-Socialism. And I suggested that if he really wants to get a lot of people excited in the crypto industry, he should give them NFTs. And people love NFTs. So even if, so they will certainly get interested in the book because there is an NFT behind it. And maybe the book itself can be an NFT because he signed it digitally. So I think one of the discussions was, aren't NFTs, kind of energy intensive and aren't, so that there's a lot of noise about the, Bitcoin and proof of work in Ethereum. And I guess you're saying proof of stake because it's not that energy intensive. It's, solves that problem. And that's why most of the new networks are proof of stake, and Ethereum is transitioning to proof of stake. So now what's in it for a bank? Marcus, are there any banks in Switzerland where we have seen a lot of crypto adoption using proof of stake or doing something with staking?
Yeah, you have the, the new crypto banks, so to call. SIBA and Signum, they are already offering staking. But the larger Credit Suisses, UBSs, and so on, they have still the problem touching digital assets in general. But I think in general, staking is way more aligned to the traditional financial industry than mining. Mining, you need a huge capex, and you need to constantly buy new hardware, these ASIC devices. And as just mentioned, with staking, you just need capital. So it's way more efficient. It's more capital efficient. And also just an add-on to the energy concerns. Proof of stake, it's 99.9% more energy efficient than proof of work. And this is a huge number. So it's capital efficient, it's energy efficient. And we all know the software is constantly shipping new versions, and proof of stake is just the newest and best version to operate a blockchain.
So that's very interesting. So what if I'm an average user, right? Let's say I'm a customer of some fintech. What can I do with staking? I mean, what's in it for me? Can I actually earn something? Can I get a return? I mean, can I generate an income with staking?
So, probably we need to define what a fintech is. I think the term fintech is still pretty often used, but at the end, it's just a nice UI for the traditional financial system, right? So you have a nice app or whatever, website, online banking at the end. And in the background, you still have the old traditional banking system. So what can a fintech do with staking? Honestly, you need to jump into crypto and into blockchain. And I think they have already a large customer base. Look at Revolut. Yeah, they can offer staking for ETH, for Solana, for all the other coins. But I think the Web 3.0 movement, which is currently starting, will really disrupt the whole financial industry and not just only providing a nice UI.
So this is something we heard from Brian Armstrong and the Coinbase CEO and a lot of the other crypto OGs, that fintech has been essentially putting mobile front ends, nice UX on top of Scotch tape and duct, legacy rails, credit card rails, Swift, this and that. And it's with blockchain technology or crypto networks that we're starting to rewire the back end of financial infrastructure. I work for Aave, and that's one of the world's best known DeFi protocols, and that's kind of how we see DeFi as well. So Kirill, that brings us to another question, right? So let's say I have a few Ether, which is a cryptocurrency. I stake my Ether, and then what happens? I mean, what happens with my Ether if I, let's say, have 32 Ether and I stake them in StakeWise?
Did you say that if you have 32 ETH, or if you don't?
If I have 32 Ether, I give them to you and I say, hey, StakeWise, stake my Ether. Now what happens?
Yeah, actually, maybe taking a step back, I think one of the other key advantages of proof of stake networks is that it is possible to delegate your capital to someone that will put it to work and run the infrastructure on your behalf, and typically take either a fixed or variable commission based off your returns. And one of the sort of booming businesses in crypto these days is precisely this delegated staking infrastructure. Institutions and retail investors alike tap companies large and small, companies including StakeWise, for delegated staking. They contribute capital and have validators created on their behalf. Oftentimes, because such services accept deposits from people at large, they are able to not simply run like a dedicated node. They are often able to pool different funds from different users together in order to create what essentially are shared nodes, and therefore lower the barrier into staking. So if you're specifically in your example, if someone were to contribute 32 ETH for StakeWise, we would be able to do two different things depending on the user's demand. one possibility would be to create a dedicated node for them. And that would essentially be the end of story. They would pay a fixed commission per month and receive all of the rewards from that validator. And of course, be able to withdraw the funds when it is technically possible. But another route they could take is go into the staking pool, which is essentially an aggregation of all the deposits that are also tokenized in order to make sure this capital is not sitting dormant and not dormant. This capital is utilized while it's also earning ether. It can be utilized elsewhere, including protocols like Aave.
So I think those are two very important points, right? One is if I want to stake ether on my own, then to run a node or a validator, which is essentially like a node on the blockchain, a computer that can be a validator. I need 32 ETH minimum, which is 100,000, 128,000 today. Now, not everyone can afford that kind of investment in a blockchain protocol. So what you're saying is pooling. Essentially, users can essentially pool their assets, and then you can even do that with $1,000 or something like that, which a lot of people can afford. And that's really, I think, democratizing. That's a really, really good idea. So the idea of staking pools. And the second thing is, if I lock my ether in a staking pool, then those ether are gone forever. I can't do anything with those. Until let's say Ethereum goes live and I'm allowed to withdraw my ether, which is another, I think, 6 months minimum. So liquid staking is kind of the big word, and liquid staking is the idea that I stake my ether or another Polkadot or something, and then I get a token, and that token is something I can move around, transfer to someone, or use in very interesting ways in DeFi or other protocol. So Marcus, on the institutional side, right? I mean, why are these two, or rather in particular, why is this idea of liquid staking where you stake your crypto, but also have liquidity so important?
Again, it's staking is super efficient, yeah, but you're locking capital. So, if Ethereum is having a 100 billion market capitalization and 70% is staked, then 70% of the whole wealth of this network is simply not used. So the possibility of creating synthetic products or derivatives, however you want to call that, based on these staked tokens is enabling, again, financial products and making this assets efficient and productive. And I think we will see it for sure. The only and I mentioned it, right? Synthetics derivatives. There are a lot of question marks lately, be it in the UK or somewhere else, about these financial products. So I think we need clarity on that side. Plus, we need clarity on the KYC or KYB element of the people who are staking and staking to a stake pool. And so if we have some elements of forensics, KYCs in place, plus we have legal clarity on synthetics and derivatives, I think then it will happen overnight that liquid staking will be one of the dominant players or dominant asset classes in the whole crypto market.
So I'm glad you brought that up. We were watching this congressional hearing yesterday with Elizabeth Warren and a few other senior U.S. legislators saying some very interesting things. And the week before, we had a really positive hearing in the U.S. Congress, which was actually quite a bit more positive, right? So I think there's quite a bit of clarity or lack of clarity around, because a lot of this stuff is so new and has grown so rapidly in the last two years, from essentially a base of a few billion here or there to almost a 3 trillion, out of which about $1.5 trillion is essentially staking, right? So the market has grown extremely, extremely quickly, and that's, I think, obviously creating some excitement. So Switzerland, I've seen some pretty big names, right? I've seen SIBA, Signum, Bitcoin Suisse, you name it. There are some pretty big names over there, and it's also a very favorable environment in Europe for crypto and Web3 businesses. So what's the general approach of the regulator to staking with regards to, let's say, AML and KYC, securities laws, and any other financial stability considerations?
So, Switzerland, traditionally, Switzerland is managing 25% of the global wealth. I think Switzerland was very smart and forward-looking by really jumping into this digital asset industry. And with all the new laws now in place, I think we have clarity. So we really know how staking is taxed. Could it be better? For sure.
Tax. There is always tax, right?
Yeah, there's always tax. But
even in Switzerland.
Yeah. But they really defined now that staking rewards are more or less interest, and they are interest. And this is coming back to the general discussion currently. Crypto was trying to invent some new terms like staking rewards to hide that it's just an interest rate. But if we now want to close the gap with the regulators again, I think we just need to name what it is. It's an interest, period, and you need to pay taxes on that, and the rest is capital gains. So we have clarity here in Switzerland what staking is. And for international investors who want to stake, this is a clear plus. So as Switzerland was managing 25% of the traditional wealth, I'm pretty sure Switzerland will play also a major role in managing digital assets.
Absolutely. And so Kirill, you, me, Renata, will all move to Switzerland soon. But on that happy note, we'll take a very short break and come right back in a minute or so. Thank you.
Do you want to be part of Breaking Banks Europe? Reach out and learn more about the opportunity to be featured in one of our shows. With over 1.6 million listeners and counting, Breaking Banks Europe is bound to become the place to advance critical dialogue in Europe and the UK fintech scene. Reach out on Instagram or Twitter at Breaking Banks EU, or go to www.provoke.fm.
Hello and welcome back to the 108th episode of Breaking Banks Europe. Today we are talking about staking, and staking is a really, really big deal. It's at least $1.5 trillion industry by value as of today, and most of the crypto networks now run proof of stake. And for a year or so, we've seen the integration of fintech and crypto, with even the noises about potentially Revolut, the biggest fintech in Europe, potentially launching a token. So we'll ask our guests a little bit more about the regulatory and tax side of this. So Marcus, let's say I'm staking my, Polkadot or Solana, and I generate an income, right? So I get some Solana or Terra or another token as a reward. How is this taxed exactly? Do I pay an income tax on this, or how does this work?
So I'm not a tax lawyer, right?
You got to be careful.
Always a clear disclaimer upfront. But at the end, staking rewards are interest, and you need to pay taxes on that.
It's like income.
It's income, yeah. And the underlying, if you buy Sol or Polkadot, and they are appreciating in value, then it's capital gain. But the staking reward itself is interest, so it's income. And to be really frank, it's getting really complicated if you're constantly redelegating. So, just as a hint for everybody, try to track it when you are claiming your rewards and redelegating, because these are taxable events.
Yeah. So there's a big opportunity in creating a better tax software that kind of handles a lot of these things automatically. And I think there are a few tax softwares out there that are trying to do that. But I know some friends, being in crypto for so long, who just sit back and generate more than a living staking income. So they've kind of hold a few protocol tokens, and they can basically retire on staking income, at least as long as we have this wonderful bullish market environment. Then after that, maybe they will come back to work in a bank. But moving on swiftly from that, so Kirill, where are you based, and how do you see as an entrepreneur, right, as a builder in the liquid staking space? What would you like to see in Europe, as in how can Europe help you be more competitive and scale, and how do you see the business environment in Europe in particular for yourself?
Yeah, I think it is a good question, and one that I'm only able to answer with the knowledge that I gathered from our conversations with lawyers and different parties in the space. So obviously, Switzerland is leading the pack on the European continent with respect to clarity about the different regulations of crypto businesses, and with the transparency that it offers. I think it's attracting more and more successful projects, and projects that are looking to do everything by the book in order to make sure they quickly solve the regulatory question for themselves from the very beginning. The alternatives to that have been actually Estonia. So this is where we have our development company, but not necessarily the service company which offers services, because the rules on staking, especially when it comes to the topic of custody, are not as clear. And in order to avoid essentially any doubt, we personally have not taken the risk of setting up the services company here. Maybe for just like taking a step back, the custody aspect can come into play when you are delegating your capital to others that run the infrastructure for you. Sometimes these capital flows are handled by smart contracts, which in general in crypto is considered non-custodial, because nothing but a smart contract can access those funds. But for like certain periods of time, such solutions were not possible. So essentially, these services relied on providers taking custody of users' funds, which in our case we avoided from the beginning. But then again, for just avoidance of doubt, we set up our company elsewhere. Other than that, I see that there are different processes happening in Cyprus, and also I think in other European countries, especially Portugal, with its really friendly tax position on crypto. But for staking specifically as like a service to be run, then it's still there are still many questions that remain unanswered. With respect to income, it's becoming more or less clear.
So let's most of our audience is fintech or banking. Let's say there is a fintech, hypothetically Ziglu, Revolut, any one of the the major fintechs, and they want to offer staking income to their customers, right? Now, the way we currently are in the economy, the interest rates are nearly zero. If you're in Switzerland, then I think sometimes they're less than zero. Marcus, my apologies for bringing out this painful topic. So it's very hard for users to earn any sort of a yield, and the wealth is going down while interest rates are low, but inflation is quite high. So you're earning nothing and you're losing money to inflation. So let's say the fintech wants to offer a staking income to their customers. And you are the experts in tech, right? So you're the experts in tech and infrastructure. You kind of know how to run this type of complicated infrastructure. Whereas, the fintechs are great at building the front ends, all this embedded API stuff and really serving their customers. What can they do? What can they do with you guys today?
Yeah, so I think it's a good question. And a big component of what they can do comes down to how do they handle customers' funds on their end? Because essentially they become the intermediary between us and the user. So
you take custody of user funds, or how does that work?
We don't. But if a fintech can prefer to run this type of service in two different ways. One, they can take custody of users' funds and essentially have an internal ledger so that they would always sort of handle these funds for users. And this considerably simplifies the onboarding process, because you likely won't need any additional checks.
So they are the experts in compliance. They do all the KYC, AML, legal contracts, terms.
Yeah, the moment you join their service, and the rest is essentially taken care of on their back end and by their legal team. Yeah. But if they do prefer to be just the interface, so essentially a tool for you to manage your crypto in a non-custodial way, then I guess it comes with an additional burden of making sure you have the proper security processes in mind, like keeping your mnemonic secure and not sharing it with others, making sure you like account for the cost of transactions on the various networks, because when you do non-custodial things, it quickly adds up in terms of network costs to do transactions.
Yeah, no, I've seen some good examples from, I think, apps like Swissborg in Switzerland, and there is a Yield app. There are some very interesting apps that I think people are building, which allow users to sort of earn a staking income. And, those guys are moving into the fintech space with their, with getting the right registrations and licensing and things like that, while at the same time, some of the traditional fintechs are starting to think about these services. So Marcus, how do you position yourself in that space, in that value chain?
We really think that in a couple of months, maybe it's a year or 2 years, these fintechs, they will not offer ETH or Sol or DOT or something else. They will already offer staked tokens, because it's, if you're a fintech and you have your clients, these clients are not using it as a gas fee to do whatever kind of transactions on a blockchain. So it's really just an investment product. So we are a strong believer that already staked utility tokens will be the number one asset class in the future. And these already staked utility tokens, they can also be treated as securities. So this is currently a road we are exploring very heavily to offer, we're calling them liquid staking securities, because it's at the end a fungible element. You can trade it, you can do whatever, but it's a financial product. But it's a staked utility.
You said securities.
Yeah,
that's sometimes that's a loaded word in some parts of the world, especially the US. So, are you saying the Swiss law treats liquid staking tokens as securities?
At the end, it's a derivative. At the end, so you can argue, and with a lot of discussions about it.
That's a very specific question, right? So what's the prevailing legal treatment?
So it's, I don't know. Honestly, I can't tell you here in Switzerland.
Right now we don't know, but that's a potential issue to think about, right? So you do need a decent compliance team that kind of studies these issues, and a good lawyer who kind of studies these issues. But then if you kind of get that right, then it's a $1.5 trillion market. So you can offer a very useful service to your customers. Then, so one of the things I will say, I've been in the space for 5.5 years now. Crypto wallets are an utter pain. So there are lots of NFT influencers who are worth 50, 100 million right now on Twitter, and they're sending their seed phrases. I mean, they're essentially sending their private keys across to people on Discord. So the security part of crypto is really hard and it's really painful. Wallets are really clunky. One of the things that I think fintech can really do is simplify, right? Make the user experience of Web3 protocols and crypto really, really easy. And then, to quote the former Goldman Sachs CEO, it's like doing God's work, right? I mean, you're really helping the consumer get access to a whole new area of opportunity. So there is clearly a value play here in terms of fintech working with crypto, right? And then the infrastructure players like yourself. So you really well said, Marcus, that the user may not want to deal with the details of Solana or Cosmos or whatever else is there, and they just want to see deposit $100, get $105 or $110, right? I mean, that's it. And they know what the risk is, how so this becomes like an asset management or a wealth play and a fintech play from a user perspective, which is really powerful. And then so how far are we in terms of have you seen any major fintechs make a move in this space?
I think we will see in Q1 the first funds offering staked assets or staked utility tokens. I think this will happen, but otherwise we're really at the beginning. All dimensions. I think on the technical side, we are really advancing, and we will see more and more staking pools, because as we just said, staking is complicated, and I think we will see staking pools where you have simpler interfaces.
Yeah, surely staking is not as complicated, and then compared to all the paper we move around in banks and getting a mortgage. I mean, even opening a business account with some of the UK banks is far more painful than anything I've done in staking. So yeah, I think if fintech can really simplify it and make it far more secure.
I think my personal final vision is we will see a merge of NFTs, which are interest-bearing tokens, and different kind of underlying strategies, be it staking, be it DeFi, be it liquidity mining, whatever. And just this graphical representation of an NFT, sometimes it's green, sometimes it's blue, sometimes it's red. It's indicating different interest rates.
An NFT for our audience is a non-fungible token, which is a way of saying, non-fungible means that if you have two tokens, then they're very distinct and unique. So each token represents an object that's very unique, right? So if it's a different, so the NFT, whereas fungible tokens are like cash, as in or stocks. Once whether you have stock number 1 or stock number 2, as long as or a £10 bill or a different £10 bill, it's still the same thing. So that's fungible. If the tokens are non-fungible, that means it's a Picasso. Picasso's each of Picasso's paintings is a different NFT. And it's very unique. It's and so on and so forth. So NFTs have kind of taken the world by storm, because using blockchains, you can essentially represent digital objects like JPEGs, right? Like a photo of your child or a photo of Elon Musk's dog as an NFT. So NFTs have kind of taken the world by storm, and there are lots of different applications in IP, property rights, digital art, generative art. So on and so forth. So, and a lot of securities are also NFTs. So we'll see a lot of applications in the financial industry, and we'll do a whole other episode on that at some point. So Marcus, thank you for dropping that, and then a couple of other terms, liquidity mining, which we'll explain on another episode. One of the good things about crypto is that the terminology, we can just impress people at parties with just the fantastic terms we throw around. But hey, we gotta do something at parties, right? So Kirill, on that happy note, so where are you in your journey as an entrepreneur, as a startup in this space right now?
Yeah, I think citing volumes on the permissionless side, which is to say on the side where no KYC checks are performed, and I guess it's really part of the crypto's ethos, at least in DeFi. We have a volume of over 42,000 ETH staked with us. So at the current prices, I think it is a little over $160 million.
And you haven't been around that long. So you got to that number in what, 6 months?
A little over that, yes. But again, I think, there are a couple of things on our roadmap that will further boost this number, and we're quite excited about the market growth in general. So it certainly is a good place to be in. Now, with respect to collaborations with fintechs and other companies, perhaps to put them in this regulated bucket, there are quite a few things that we're working on ourselves. And really, when Marcus is bringing up liquid staking securities, I do think that a key question for many of these products will be how to ensure liquidity in a compliant manner for these types of assets. Because in order to make sure that, at least from our perspective, we would want to build a product that makes sure customers' funds are only interacting with the other assets that come from known counterparties. And for that, you cannot really tap into the permissionless side with permissioned product. You need to have like a separate sandbox of its own. And whether this is ensured by having a capital reserve by the service provider, or this is solved with the market makers on the permission side, or maybe there's another solution like permissioned liquidity pools, we will see. But the key part of the equation for us is solving for this. And once this is unlocked, the potential is truly limitless.
Right. I think, so we also kind of see ourselves as software providers whose software is used to enable infrastructure, and we as in DeFi protocols. So obviously on top of the rails we are building, whether it's staking, or sort of other DeFi protocols, then the decentralized finance, then I think fintechs will essentially provide all of those bridges. That's kind of the working assumption or the mental model in the industry, and I think it makes a lot of sense. So what's the next step for the evolution, as in what needs to happen in Europe? How can, let's say, policymakers or regulators make it relatively safe for consumers, but also kind of help, in Europe, we have a history of regulating before we actually innovate. And I'm not counting Switzerland in that, but how do we sort of, and I'm seeing so much noise in Europe around regulation, right? MiCA, this and that. And how do we what sort of policy environment can we create to create consumer safety, but also, make sure that we remain very competitive in this space, because it seems like a big industry. And I saw T-Mobile make an announcement about potentially doing staking. So clearly something is there. Now, what do we need from policymakers?
First of all, it's interest, right? And I think the interest is there. I think the interest to learn and to understand the space is clearly there. And the second thing, which is just fundamentally, is providing freedom for innovation, as you just said. I think it's and a lot of policymakers and a lot of regulators, governments, they realize it's also kind of a race, a competition. You do not want to lose this new internet phase at the end. A lot of countries lost the first internet, or the second and the first one. So you do not want to lose and fall behind any further. So, and I think this is something we're realizing. They know that there's something coming, which is super powerful, and they want to be part of it. And to be concrete, what do we need? I think it's the dialogue. We see it in the US pretty strongly. The dialogue between the industry and the regulators at the end, to understand more what's going on and how they can support. It's a very general answer, but that's the case.
Yeah, I would tend to echo the sentiment. Making sure that we don't stifle innovation, but also make sure we protect the consumer. I mean, it requires striking the right balance, and it only can be achieved through two-sided communication.
I think that's absolutely the case. So have you had any, let's say, policy institutions reach out to you and say, hey guys, or, we want to learn more about it, and, we want to understand how this thing actually works? Or have you been just hearing the news from media about where Europe is going with this?
So I think the focus is currently very much on Bitcoin itself, right? A little bit Ethereum. The migration to Ethereum 2.0 is, at least 6 months down the road. So staking in general is not as much on the agenda at the moment than a fundamental understanding of digital assets.
So I think so we need to do more in terms of education, right? Because I think when people think about digital assets, and they're thinking Bitcoin, or they're hearing Shiba Inu from in the news, or some random bad news, but they're not really seeing the industrial scale innovation on the internet that's now going on. So clearly there is something to do, and hopefully our episode here will kind of drive a little bit of a better understanding of that space. Now, let's say I'm it's the last question on this is I'm an average citizen of one of the countries in Europe. I mean, and I'm wondering what's going on with my pension and my wealth now. What's the best way I can learn about staking and how it can help me generate wealth for myself, and I'll find the services myself, right? So what's the best way to get started?
Yeah, well, it's quite simple. You should Google StakeWise and jump into the rabbit hole. But if we're serious here, I do think that it's important to understand how staking and proof of stake networks work. First and foremost, like making sure that you understand all the risks and the potential returns when you go into this is important before making the investment decision. So I think the best resources to learn about this on the Ethereum side specifically is to make sure you go through the detailed explanations on the Ethereum Foundation's website. But other than that, there are a handful of communities that are very welcoming for the newcomers. on the internet, and Twitter, Reddit, and staking pools communities as well, like StakeWise, Rocket Pool, a few others that are always willing to answer people's questions, related to any aspect of staking in a pretty candid manner. So any type of interest is always welcome in these, and we'll make sure to give you the best information possible.
Amazing. So yeah, you're absolutely right. I think as entrepreneurs and innovators, it's our role to educate and share what we know, and hopefully translate it, and and hopefully when we go to parties, explain the terms we use, which is what we've tried to do on this particular party, our wonderful episode 108 of Breaking Banks Europe. For a while we've tried to impress people, but I think now with people like yourself, Kirill, and Marcus, who kind of are very connected to the main street, we are starting to explain the terms and kind of really have a much more grown-up conversation with policy, with with fintechs, with the mainstream financial services about where the opportunity is in this space. And I really thank you for helping our audience and the European fintech community and the global fintech community really understand what this is, what's going on, where the opportunity is, and where can they. So Kirill, where can people find you on social media, you personally?
Personally, actually, I don't have social media. StakeWise really consumes a lot of time, so I ditched all of that. I think the only social media profile I have to date is LinkedIn. So I'm happy to field any questions and assist with anything on LinkedIn. So
StakeWise_IO is your Twitter handle?
Yeah, pretty much it is.
And Marcus, where do people find you?
And I need to confess, I'm pretty active lately on Twitter.
I know very well.
So, it's Telegram, Twitter, LinkedIn, Marcus Maute. Reach out to me. Super happy to chat and explore further opportunities. Just the last word from my side. This is the best macro hedge you can have is technology. And digital assets and crypto is currently the biggest technology movement of all times. So I think we will see a lot of asset inflow in the future.
This has been really awesome. I think thank you so much for joining me on this slightly complicated, slightly involved topic, and really making it easy and relevant for fintech and also for the average consumer in policy. Really, really thankful for that, and hope to see you again on one of our future episodes around the Web3 crypto decentralized finance space. Thank you so much.
Awesome. Thank you very much.
Thank you, Ajit. Thank you, Marcus. It's been a pleasure.
Thanks for listening to Breaking Banks Europe, a Provoke Media podcast in cooperation with Fintech Stage. Don't forget to tweet us out, shout out, or post to the team at Breaking Banks EU on Twitter. If there's something or someone you'd like to hear on our cast, let us know. See you next week on Breaking Banks Europe.